There is, in my opinion, no better choice when it comes to actually being able to live off passive income than being able to live off dividends. Although there are other ways to generate passive income, such as owning real estate assets, publishing your own book, or beginning a blog, there is truly nothing that requires as little maintenance as being able to live off of dividends from your investment portfolio. You still have to deal with building maintenance, finding tenants, and evicting individuals when necessary if you purchase rental property with the intention of making money from renters. When licensing your own music, for example, you still need to write songs that listeners want to hear and will pay money for. This is the case whether you're using a blog or licensing your own music. However, when you invest in dividends, you automatically receive dividends each month or quarter into your brokerage or bank account. With the possible exception of perhaps monitoring your portfolio once every several months, it's the simplest way to support yourself without lifting a finger. Other than that, even if you couldn't entirely rely on dividends for a living, I believe it to be the only genuine method of generating passive income. With that extra cash, you could be able to choose between working a job you detest and changing careers to one you genuinely enjoy, or you can choose to work part-time rather than full-time, so you can spend your leisure time with loved ones, friends, or however you choose. The quantity of money you'll need to have invested, though, is the biggest obstacle to being able to live purely on dividends. It's easy to find a ton of videos on YouTube that claim that having at least $1 million in savings is a need for being able to retire early. The recommendations are considerably worse if you visit several business and financial websites. If you want to retire at age 35 and make $65,000 a year, you need to have at least $3.3 million in stock investments saved up. If you don't think you'll make it that far, you just need $2.8 million saved up by the time you're 45. They suggest that even if you retire at 65, you need to have $1.6 million saved up for a monthly income of $65,000 if you want to live off stocks until you're 90. According to another article in the Globe and Mail, you will need to save up approximately $1.33 million if you want to receive $50,000 per year in dividends, or only $1 million if you simply want to make $40,000 per year. But let's be honest, if you have nearly $1 million saved up to invest in dividend stocks and you're 40 years old, how far do you think $40,000 per year would get you until you're 85? Most individuals become quite disappointed after reading all of these articles and viewing all of these YouTube videos, since it appears that only the extremely wealthy can actually retire early in life. But now, I want to let everyone know that there is a way to reach the goal of living off on dividends without having to invest $1 million or wait until you're 65. We're going to examine a variety of investments to see how much cash we actually require to live off profits. For the purposes of this example, we'll suppose that you want to make $4,000 each month, which, depending on your own circumstances, may or may not be a lot. You will need a lot more than this if you have 4 children and reside in Los Angeles. However, if you reside in a rural area of Tennessee and are willing to lead a frugal lifestyle, you can actually get by on much less each month. First, let's look at several extremely well-liked dividend growth stocks. When determining when you may retire on dividends, the videos and articles all employ investments. We'll use Johnson & Johnson, which trades on the stock market under the ticker J&J, and is arguably one of the most well-liked dividend stocks available. Johnson & Johnson trades for $172.93 per share, according to Seeking Alpha. Currently yielding 2.45%, it distributes a quarterly dividend of $1.75 $1.06 per share. Taking $12,000 and dividing it by $1.06 gets us $11,320, which is what we need if we want $4,000 a month or $12,000 a quarter. This is the quantity of J&J shares we must own in order to earn $4,000 every month. $1,957,567.60 would be required to purchase 11,320 shares at a price of $172.93 per share in order to be able to live off dividends today. If you follow the dividend growth strategy of consistently investing, eventually you will be able to live off of your investment in J&J, and the truth is you won't have to invest literally $1.95 million, which is what almost no one watching this has or even would be able to save up this much money in one person's lifetime. I know what you're all thinking. You only need to continue making a sizable monthly investment, wait 20 or more years for it to grow, and ultimately you will have a comfortable nest fund to live off of. While that's completely okay, there are a few drawbacks to this approach to investing. The toughest part of it is waiting and assuming that a stock would be able to raise its dividend every year for decades. You'll need to wait a very, very long time until you have enough shares of Johnson & Johnson to live on, as its yield is only 2.45%. Since it is a very lengthy process that often takes the most of your working life to achieve this, throughout that time I've seen a lot of individuals just quit because they lose the motivation. Don't get me wrong, this approach of investing isn't horrible if you stick with it and begin when you're young. You will eventually have a pretty nice sum of money. This isn't a smart plan though, if you want to be able to retire early and live off of dividends because of how much time and money it requires. The natural next step would be to think about investing in higher yielding types of investments. If it's going to take a very long time to save up enough money in Johnson & Johnson type stocks.
Let me know in the comments if you have any other questions about investing. Let's return to the video.
Let's look at another incredibly well-liked stock, Realty Income, ticker O. This business is a real estate investment trust, which means it owns properties that generates revenue and is mandated by law to distribute 90% of its profits as dividends to shareholders. In comparison to most consumer staple equities like Coca-Cola or Procter & Gamble, it currently yields 3.95%, which is higher. It also pays a monthly dividend rather than a quarterly payout, which is a plus. Real Estate Income pays $23.55 per share every month as of right now, which will aid in our calculations. Realty Income is frequently regarded as one of the safest rates since, according to their website, they have grown their dividend for 95 consecutive quarters. Again, we'll take $4,000 and divide it by the current monthly dividend, or 0.2355, to get an income of $4,000 a month. It becomes clear that we must possess 16,935 shares of real estate income in order to generate $4,000 a month in revenue from it. We get a total of $1 million, $215,276.75 by multiplying by 7,155 cents. Even with monthly dividends that will speed up compounding, this is still a significant amount of money, and while it's not as bad as Johnson & Johnson's $1.95 million, it's still out of reach for the majority of people in their lifetimes, or at the very least, very rapidly. Most people will still need a long period to accumulate enough real estate income shares to support themselves. We'll boost the ante by pursuing a business that is offering an extremely high dividend yield as we look at a different stock presently. The American firm Altria, which trades on the stock exchange under the ticker code MO, manufactures and distributes alcohol as well as tobacco and vape products. It currently offers a staggering 7.27% dividend yield. As of the time this video was being produced, it pays 90 cents a share in quarterly dividends. At the current share price of $49.53, you will need to acquire roughly 13,334 shares of Altria in order to earn $4,000 every month or $12,000 each quarter. This would need you to invest a total of $660,433.02. If you were to remain devoted, maintain investing in the stock, and make a commitment to reinvesting those dividends, this sum would now be substantially more reachable for more people. If they start early enough, a lot of people may generate $4,000 per month in passive income. But we need to ask ourselves a very important question. Is it really a smart idea to spend so much money and depend on just one stock for our livelihood? Obviously, the response is no. I would never advise investing $500,000 in a single business and depending on that business for all of your daily expenses. To prevent one of their assets from drastically reducing the payout, investors must diversify their investment portfolios. Your dividend income and thus your way of life could be significantly impacted if Altria ever decided to lower their payout. It makes sense to invest in a variety of businesses because the exact same thing happened recently to AT&T. However, the problem is that there aren't many firm stocks available with dividend rates comparable to Altria's. Master limited partnerships and some business development businesses do provide high yields, but these investments are significantly riskier overall. What specifically may investors invest in that offers very high and frequently still increasing dividends then becomes the question. The so-called covered call ETFs, which offer outstanding dividend yields, rising distributions, and monthly payments, are what I think make for a solid investment for anyone wishing to live off dividends sooner. These investments are comparatively more recent and haven't been around for very long, but they are becoming increasingly popular. They utilize a covered call investment approach in which the fund purchases a basket of stocks and also sells call options that are related to that basket of companies. If you are unfamiliar with options, this can be a little challenging to grasp. The option premiums from the sale of these options are distributed to investors as dividends, giving us as investors access to very high dividend yields. The most well-known covered call ETF is QYLD, which right now has a dividend yield of $11.80. There are two other covered call exchange-traded funds that are very well liked. One is called JEPI, and it uses covered calls as well as equity-linked notes for stability. The other is called NUSI, and it uses covered calls and protective puts, which prevents the fund from falling sharply in a bear market. As you can see, despite having smaller dividend yields than QYLD, JEPI and NUSI have substantially superior long-term price growth. As you can see, QYLD's share price has performed the worst of the three, but it does offer a greater dividend yield than the other two. This graph illustrates what you would have had 5 years ago if you had invested $10,000 in QYLD. When dividends were reinvested, this fund actually outperformed Johnson & Johnson over the past 5 years. So let's calculate the amount of money we will need to invest in order to earn $4,000 every year. We'll start with NUSI. If we split $4,000 by the fund's most recent monthly dividend, which was $18.65, we obtain 21,447 shares. This is better than Altria since when we increase it by $28.73, we receive $616,170.31. But keep in mind that this is not a diversified exchange-traded fund, and it is not invested in a single firm. Let's use QYLD at last. We acquired 21,287 shares when we split $4,000 by its most recent dividend, which was 79 cents. If we compound this by the stock's current share price of $23.03, we see that we would require $490,239.61 in order to maintain a monthly dividend income of $4,000. Remember, if you reinvest those dividends each month and let the snowball effect work its magic, you don't actually need to invest this entire sum. Depending on how long you wait, you'll actually need to invest a lot less money than this. You would only need $245,119.81 if you can get by on $2,000 per month, perhaps from Social Security, a retirement account, or some other source of passive income. This now seems much more attainable than equities of the J&J variety, don't you think? If you ask me, living off the dividends from a covered call ETF investments together with other equities is much more doable than producing a best-selling book or generating a ton of money from selling stock photos or jewelry in Etsy. Again, even if you can't live entirely off of dividends, being able to make an extra $1,000 or $2,000 a month can certainly cover a lot of expenses in your life. I hope that this video convinced you that you can start living off of dividends much sooner in life. For investors who want substantial payouts each and every month, these covered call exchange traded funds have truly changed the game. If you're interested in learning more, visit the subreddit QYLD Gang, a group of thousands of individuals who are investing in these ETFs to achieve financial independence sooner. It carries a little bit more risk than investing in consumer staples and will cost you more in taxes. But in my opinion, the rewards are well worth it. Living off of dividends is possible as long as your portfolio is diversified. But whether you choose to pursue dividend investing for income or growth, the first important thing you need to do is just get started. You'll be closer to establishing a comfortable nest egg you can rely on the sooner you start investing in dividend stocks or exchange-traded funds. That will conclude today's video. I want to thank you everyone for watching and say that I would really appreciate it if this video had any kind of positive impact on your life. Hope you have learned something from this video.
What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching.
Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.